Hello friends, this is Raj Sastry from Raj Option Trading. Today is December 10th, 2022. Hope you're all doing well. In today's segment, we'll take a look at top stocks with a very high short ratio. As many of you know, when the short ratio is high, these stocks can create a short squeeze and go higher. Let's look at top stocks with the very high short ratio and see how to benefit from it. Look, I'm using Finviz platform, as you can see here. It's a great platform to scan for great stocks and great ideas. So what I'm doing here is I'm looking at a short float here. Look, I'm looking at float short over 30%, so that way I can look at top stocks with very high short ratio. And one more criteria I have is current volume more than 1 million shares traded. So that way I get liquid stocks. When you're trading short squeeze, always go for liquid stocks. So with that, because I'm using the Finviz Elite platform, I can create my own custom view. As you can see here, I can choose what I want to see. If you don't have Finviz Elite platform, I recommend you to go to the ownership tab here. Ownership tab will give you the short float ratio, as you can see here, along with the insiders ownership and insider ownership, institutional ownership, as well as insider transactions. You could try to use this one, but it's so convenient to have the custom view here, so you can look at the ones that you really want to see. So with that, look, my filter criteria is very simple. As we talked about, short float over 30% and current volume more than 1 million shares traded. Look, we got just 13 stocks, as you can see here. Not too much. Out of 8,000 or so stocks, we are filtering down to 13 stocks. And look, I sorted this by short float here. All these stocks have got very high short float. And you can also look at the float itself, how much float or how much shares are really available for you to trade. As you can scan through here, if you want to play short squeeze game, you should be looking for lower float. Look, we got Mobile Eye, very low float here, single digit. So the moment you see low float names, either single digit or lower double digit, that's where there's a greater possibility of a short squeeze. And the reason Mobile Eye is going higher off late is because of this low float combined with a very high short ratio. That's why if you look at the performance week, performance month, it's going up nicely. And even on Friday, it has gone up nicely, as you can see here, 6% up. And we also have RSI here. We got RSI 64 that tells you it's trying to reach a overbought zone here. A lot of people are buying. So when you trade a stock like Mobile Eye, you got to be waiting for a small pullback here versus chasing the stock into 30 plus performance in 1 month. It's always a dangerous game here. I would rather wait for a little bit pull back here. But if you want to trade this, you always have to be very careful, very quick. You can't be passive type buy and hold here. I would say if you're a short squeeze type player, you got to be quick, take some profit quickly and get off, because the moment these stocks will come down, they'll come down hard. That's why, especially when the stock is overbought with a higher RSI like 64, you got to be careful. Don't just buy and sit on it. Instead, be very active, take profit. All right, so we got a few more here. Look, we got Carvana. As many of you know, Carvana has been making some headlines of late. Looks like they got a challenge. Company might go bankrupt. That's why, look, volume went higher. Look at the volume in Carvana, 52 million shares traded. And typically when the company announces bankruptcy, some of these speculative traders will become so active. They will start buying. Look, it's got the price has gone up in 1 day. So even though after hours it went down, Typically when a bankruptcy is announced, all these speculative short traders, they will get so much interested, and they will start buying just to take advantage of price swings up and down, because as bankruptcy is being negotiated, as credit lines are being negotiated, these stocks can be swinging wildly, and you can make some good profit here. Especially look at the RSI here. RSI, or the relative strength index, is 33. That tells you stock is completely sold off here. That's why a case can be made for a stock like Carvana here, given it's got very low RSI, and there are some discussions going on. You could be taking the other end and buy some slowly, but be careful, don't buy and hold here, take some profits very quickly. And we got a few more here, Beyond Meat and so on and so forth here. Even keep watching the RSI levels here. RSI levels, if it is lower than 40, those are the stocks which are completely sold off here. Look at this apron, blue apron, APRN. RSI is 23. It's completely clobbered here. For a stock like Blue Apron here, I don't want you to catch falling knife here. Look at the performance here, 1 week, 1 month, all down here. And even on Friday, look at Blue Apron performance, it's down. So for a stock like Blue Apron, unless you are a little bit longer term holder, I say don't buy. Look for some proof of stock going higher, at least stock going over its 5 days simple moving average. Then you can start buying at this time. Even though short ratio is the highest, I would think it's good to stay away, so that way you don't get burnt. And other important thing, as you can see here, always watch for insider transactions and institutional transactions. And when there are insiders buying, for example, Carvana looks like insiders are buying. So for a stock like Carvana, where insiders are buying, institutions are buying, that tells you there is some support here. And you could also look at how much institutions are ownership perspective, how much they're owning, and those will provide good support level for the stock. But Carvana is a different story. Now companies thinking about their money crunch and potential bankruptcy. You got to be playing a little safely here. And as you scan through here, we got RKT here. Look, RKT is going slightly higher. I mean, insiders are buying slightly. That's also a good sign here. And then I always look for the performance, how it's doing in say 1 week's time frame. If it's going higher, that tells you there is some potential for this stock to go higher. For example, we got Mobileye up 5% here, and we got one more right here, Beyond Meat up nicely. But at the same time, in addition to watching the performance per week, you also got to watch RSI. So if the RSI indicates it's overbought, meaning above say 55, 60, then shy away slightly. But if the RSI is relatively lower, for example, here Beyond Meat here, RSI is 53, the chances are this can go still higher. And when the RSI is completely sold off here, look here, you got Marathon Digital, one of my favorite stock. Crypto has been acting up very weird of late, going down with all these FTX challenges. If you're a long-term type player here, you could buy some Marathon Digital here, and profit from crypto going higher as we go forward. Alright, so always look for how the performance is in a one week time frame here. The way to think about this 1 week performance is really think of as if hey, stock is going over its 5 days simple moving average. If it's trending higher, that's when you want to jump in. But if it's trending lower, be careful, don't catch a falling knife. It's not going to do well for anybody. All right, so next thing I will do is, let's look at the market as a whole very quickly. That will give you some good idea, and we'll go into a few more things here. For a market as a whole here, I would typically go into trading view here. Look what's going on from a market perspective. From a market perspective, look, market is kind of trending down, as you can see here. That's why you got to be careful. We got few key meetings coming up next week, including the Fed. You could expect maybe say 50 basis point rate hike from Fed. and there are some numbers coming out from a CPI perspective. You got to be careful. Next week is again a rocky week. It can go up or down. Potentially there are chances it can go down, so you got to be slightly careful here. And we got Nasdaq here. Look, Nasdaq is also very cautious here. It's trending down, as you can see here. So that's why you got to be careful here. And next thing you got to always pay attention to is how is the overall sector rotation is coming up here. So for sector rotation, my favorite place to look for is Traditix.com. So if I take you here to Traditix.com, you could go into stocks on the top here in the market dashboard. As you go here, as you go down, this is available to everybody. Even if you are if you register your account in Traditix.com, you could see these things. It's available free of charge for registered users. Look, we got a sector rotation right here. So what I typically do is, I go from a higher level to a lower level. You can look at 120 days. It can be a little bit eye chart, but it gives a good idea. Look, we got 120-day sector rotation here, and look what's going on at the top. We got energy, which is XLE, as many of you know here. Look, XLE went higher somewhere in 2022 beginning, as you can see here, went very well. Look what's going on now. XL is coming down here, so that's why you're kind of understanding here at this point here what XLI had run its course here. So it's now coming down, as you can see here. So XLE energy, it's coming down. At the same time, at the bottom of the pile here, we got a communication sector here. Think about stocks like say Google, Snap, Meta, or Facebook. All these stocks are, even Verizon for that matter, all are part of this XLC, and that's trending slightly higher. So there is some chance that these communication sector stocks can go higher at this time. And you could look at some more trends here. We got let's see, we got real estate here. It's also trending slightly higher, as you can see here. It also got clobbered before. And then you got other sectors. We got technology here. Technology is also trying to recover. Technology has had very bad time. So that tells you in a 120-day time frame what sectors are going higher, what's trending down. And look, we got at the top here industrials. Industrials also cruised along pretty nicely. Even now they're holding up pretty okay here. All right, next we could look at say 60-day here. It will give you a little bit near term what's going on. Look, 60 days a little better. It's not a big eye chart here. Look, in 60 days we got energy here. Energy, you can see here kind of coming down as if like a free fall here, coming down nicely. That's why at this time be careful with the energy here. Let it come down slightly, then you can jump in, but you got to be slightly careful here. At bottom of the pile, you got XLY here, consumer discretionary. Think about Amazon.com, Home Depot, and so on and so forth. Looks like they're in the bottom of the pile here in a 60-day. And then we got green here, communication services. Think about Facebook, Pinterest. Looks like that's trending higher slightly. So that gives you a good idea here. And then we got here right here, materials. Materials are doing well. And where it gets interesting is as you go into 30 days and 15 days, better trend will emerge. Look, as you go into, we are in 30 days right now. At 30 days, look, energy is in the bottom of the pile here. And then we got here consumer discretionary. At top of the pile, we got here materials. Materials seems to be doing very well. And we got here a few more here, utilities doing well. And look, we got consumer staples and even financials and healthcare. They're relatively doing very well. And then you could look at 15-day here. This is where trends will emerge. Look, energy coming down. Look at the steep drop in energy. At the same time, if you look at the top of the heap here, XLU utilities are doing well. You got to pay for the utilities. That's why they're doing well here. And then you got healthcare doing well, and you got consumer staples and materials. And look, we got industrials, and look, we got financials coming down slightly here, and we got communications trying to go slightly higher, and so on and so forth here. And it gets more dramatic as you go into 7-day here. Look, in 7 days energy is clearly coming down. Look at that huge big drop in energy. That's why, and even though energy has done very well, keep watching for the sector rotation here. That will serve you very well. All right, now let's go back here to our stock screener. So this is our short screener like we talked about. These are the stocks with the very high short ratio. Keep watching the short ratio here. And next thing I typically look at is really, I look at one of my favorite platform here, fintel.com. Look, Fintel is, it's not for everybody, but if you're good with, some of this query type language, it can be a good platform here. I think they got a quarterly membership program or a subscriber program or a yearly subscriber program. It's not very expensive. It's around $25-30 depending on whether you're doing a quarterly or yearly. But the benefit of this platform is you get to write your own query as if you're writing a SQL query, and it will bring up the result. Look, I wrote a quick query here, not fancy. What I'm doing is really, show me the stocks where price is more than $1 in US. This is default, you don't need to put it here. And I'm also saying I want to see short float, I want to see days to cover, and I'm also telling, hey, you know what, I want volume more than 1 million shares traded. I want the short float more than 30%. And because this platform also gives you some of the option related statistics, I am adding some option statistics like option volume. If you're an options trader, you want to know what's option volume. And this platform also gives you gamma score. So I love to look at the gamma score. This is my simple query, not a big deal here. And I'm also ordering my result by short float in a descending order, meaning I want to see highest short float at the top. Very simple query here. If anybody is interested, I can paste it in the comment section if anybody is using Fintel. All right, look, from a result perspective, look, our query has processed here, it's run, and look, we got here our short interest float here. We got stocks with high float at the top here. I would ignore some things here because look, we got very, very high float here for App Loving, Berkshire Hathaway, and BRRX. I would ignore these things here. It's too high for me to consider. Probably there is some glitch in the processing. Maybe it's a glitch with the data provider. I would ignore the things at the top here. But look, these are the ones which are matching. Even it matches with what we have in fintel.com. The reason I run this query is really I love to look at some of these option stats, and also I love to look at things like days to cover, borrow rate, and short squeeze score, and the gamma squeeze score. These things are not available within the Finviz platform. In addition, I love to look at the option statistics like option volume, put call ratio, and the net delta. I love to look at option net delta and the price. The reason I love to look at these because the moment there is a very high short squeeze score, for example, look, APP as an example, it's got a very high short score that tells you, hey, this can squeeze, and even the gamma squeeze score is high. That tells you there is a good chance this can go higher. I also look at the option net delta. So this tells you if the option net delta is negative, this tells you the retail traders like yourself and myself, we are basically buying more put options. That's why options delta is negative. The moment options delta is negative, the market maker on the other hand, they will end up having the positive delta. So the moment market maker has got the positive delta, they have to basically hedge it. They have to hedge it by buying some stock. That's why, the moment there is a positive delta, for the market maker, you got to be slightly watching out here because it can create some the stock may not move too much the moment market maker has got positive delta here. And we got few more here as you can scan through. We got look, we got Carvana here. Carvana has got it's got very big positive delta. The moment retail traders have got positive delta, uh, guess what happens? The market maker will have a negative delta. The moment market maker has got negative delta, they will be supporting the stock's move. If the stock goes upward, that move will be exaggerated. If the stock goes lower, that move will be exaggerated, because this market maker will be supporting the market trend, because they got a very high negative delta. Because look, retail trader has got positive delta, that means market maker has got negative delta. That means they're going to support the move. That's why the Carvana is a very good stock at these levels here. If you're a quick, if you're a very quick and active trader, you could trade Carvana, even though there's a bankruptcy looming, mainly because there is a negative delta with the market maker. This can really go high. If the stocks tend to go a little bit higher, that move can be exaggerated and stock can go higher. And we got few more here. Keep watching for the positive delta here. We got Fisker here. Fisker has got positive delta. The moment Fisker has got positive delta, market maker has got negative delta. So that's why this can also go higher. And we got Bed Bath and Beyond, same story. Look at the positive delta here. That's a big one that tells you this can also go higher. And we got Nikola, same story, because it's got positive delta. That means the market maker has got negative delta and they can support the move. That's why when these stocks go higher, they go higher big time. But if they go lower, they will go big time, because market maker will support whatever the move stock is making. On the other hand, if the option delta is negative, market maker is not going to support the move. They're going to do counter to the move. So that's why I love to look at options delta and options volume to really understand what stocks with a high short ratio are very active in the options market. All right, now let's go back to Finviz.com here. And now I would look at, now I understood this here. I would be a little more selective here. I would go to my custom here. And I say, what? I already looked at high short ratio over 30. Now I would go look at, say, 20 to 29 here, because we already looked at 30. So this tells you the next tier of the stocks here. So as you go into 20 to 29 here, look, we got the next set of stocks here. We got 43 stickers, as you can see here, out of 8,000 or so stocks here. You could look at this here as usual. Keep watching the insider transactions and institutional transactions, as you can see here. And the moment you see some big things here, look, IBRX here, looks like institutions who are buying it. That's a good sign here. Look, stock is performing very well. And you should also look at the RSI levels. RSI is 58. Stocks like this, I would shy away slightly. I want this to come down slightly, because look at that move. It's gone so higher. You got to be slightly careful here. At the same time, keep watching, the insider institutional transactions here. Look, we got ABBYA here. Looks like insiders are buying, and look, stock is not moving much here. It had a small run on Friday. Look, 1.79%, and it's got a very low market cap here, 95 million, as you can see here. And if you look at the float here, float is 71. I would say it's relatively high float, for a 95 million, market cap company here. That's why, with stocks like this one here, you got to be slightly careful. Look at the performance here. It's been trending down big time here. That's why I don't want to catch the falling knife here. Let it come up slightly, then you can go buy it. And also keep watching the RSI levels here. If the RSI is above, say, 55, 60, don't chase it, not worth your time. But if the RSI is below 50, then you can try to buy them as you see some positive momentum, at least in a week time frame here. If you see some positive here, then you can buy those stocks here and go for a short squeeze. And as usual, if you're a conservative investor, keep watching earnings per share and price to PE ratio. If you see earnings per share positive, like Figs here, it's a positive earnings per share. That tells you, what, at least company is making some money. There is some hope. But if it is completely negative earnings per share, that tells you these companies are not making money. So that's why you got to be very, very, very active in those names here versus being passive. And we also have a few more information here. You can also look at the debt to equity ratio here and the current ratio. If the debt to equity ratio, if it is super high, look, we got a few stocks here with the super high debt to equity ratio here. You got to be slightly careful with such names here, like LAZR here. You got to be slightly careful. And we got the current ratio. Current ratio, I think, look, we got few names with the nice and high current ratio, current assets by current liabilities. I think it's good to know current ratio is high. That means these companies have got enough liquidity. They can, really manage well. They do have current assets to cover current liabilities. Not a big issue here. When you see lower, current assets, current ratio here, you got to be slightly careful with those names here. Like we got Siri may be okay here. It's it's been there for a while, but typically if the current ratio is lower, you got to be slightly careful. All right, so this is about the next set of stocks here, and I would love to see, as usual, the 1 week performance here. And if it's trending higher, then I would be looking at those. I would also watch the RSI. If the RSI is above 55, I'm not interested. And with this platform, what you can also do is you can also say RSI, and you can say here, I want to see RSI oversold. And you can also do a custom here, and if you have elite platform, you can say RSI between 0 and 55. Let's see here, 55. So now you're getting the stocks that you could you could really participate in the move, because RSI tells you these are not oversold. RSI levels are below 55, and you can hone in on such candidates here. Look, we got few names here. You could look at those names here. Look, one right here, TCDA. Very low market cap, as you can see here, but stock is coming down. This probably is not worth your while. You got you at least want to see some positive greens here versus all red. And we got one more here, NRBO here, $10 million company, not too much at all. But this one has got a lower RSI, but looks like this is going higher. You could look at such names here if you're a speculative type trader. But if you're a long-term, a little more longer-term swing trader, this may not be worth your while, because it's very low market cap, as you can see here. And also look, earnings per share is minus 15. That tells you company is not making money. And we got here our favorite stock here, not JWN here. JWN, which is Nordstrom, as many of you know here. This is making money. It's got positive earnings per share, as you can see here. RSI tells you it's beaten down here. Look, this retailer is coming down. Typically, when the market is tough, when there is a recession fear, these type of folks will come down drastically. So if you have a little bit longer term horizon, you could buy stock like JWN here. But if you have a shorter term horizon, wait for some positive indication that, hey, it's going higher, maybe in a, it's above its say 5-day moving average, then you can buy. But JWN typically, if it's when it's sold off here, you can always see some bounce. All right. And we got stocks like SI, which is Silvergate Crypto. It's a bank stock, completely sold off here, as you can see here. And this one also is a scenario you don't want to catch a falling knife here. But if you are a little bit longer term investor, you could buy SI, mainly because look, they got EPS positive, company is making money. But with all this crypto news and bankruptcies, stock is completely clobbered here. Look, it's completely down. And look at the profit margin here. They got 47% profit margin. This one could be, for the long-term players, but look for some evidence that stock is going higher in a 5-day time frame. Then you can jump in. Don't catch a falling knife. All right, that's about this one here. Now look, we can look at say maybe 10% to 10% to 20%, so that way you can look at few of these names here where float is really between 10 to 20%. And I could remove this here. I could say just click. There you go. So look, this is our last batch here. We got here short float between 10% and 20%, still volume over 1 million shares traded. Look, we got that list right here, and as usual, same methodology here. Keep watching for the insider transaction, institution transaction. If you see something where there's very high transaction here, like Asana here, the founder has been very active in the stock here, but stock is not showing some progress as you can see here. On Friday, it's slightly higher, but look at Asana. It's been dropping off big time here. Performance from 1 week all the way to half year, 1 year, it's all negative. With stock like Asana, you need to see some evidence the stock is going higher, then you can buy, but otherwise stay away because it's a falling knife at this point here. And keep watching here. We got 1 month performance positive in AMRS and NVTA here. You could look at such names here and see if it's worth your effort. And also keep watching the RSI. Don't buy the stock when the RSI is super high, but this list has RSI lower. As you can see, there's nothing where RSI is super high. And keep watching the performance per month here. Look, or week. We got one stock right here, SFT here, very small cap company here. This seems to be going slightly higher in the week. That could be a good sign here. And as usual here, keep watching the float here. If the float is super high, for example, stock like PR here, float is slightly higher. So there is a supply of stock available. It may not go too much higher. Whereas float is lower, say single digit or double digit. That's where stock can participate in a short squeeze. Alright, so now what we'll do is we'll go into my favorite platform, which is tradeetics.com, and look at some names here. So what I will do is I will go back to very high short ratio here. I will say short ratio more than 30%. Where is my short float here? More than 30%. So we can look at few of these very high short float names here. All right, so we got few names here. What we'll go into here is we'll go into the stock market or stock ticker here. We'll look at few names here. Top of the list here, Carvana, as many of you know here. Let's look at Carvana and see what's going on in Carvana. Look, Carvana right now, stock price is at $5, as you can see here. This was a Wall Street darling a while ago with a very high stock price. And what we'll do is we'll go into this chart right here. I think I already have this chart up here. Let's look at this chart. Look, from a dark pool perspective, it's always good to look at dark pool to understand what's going on here. From a dark pool perspective, we got some negative dark pool here. Look, we got bid at 4.3 here for $688,000. And looks like we got some positive dark pool levels at $5 and even 5.2. There's some good positive dark pool levels. So that's why the stock can go into these levels here, 5.2 and 5.0. Looks like there is some positive dark pool levels here. That's why you can see the stock, even though stock is at 5.05 here, it can slightly go higher to even 5.2. So there is a some good pull here. And you could also look at the Greek levels here. I love to look at the gamma levels here. Let's look at the monthly gamma levels and go from there. Look, from a monthly gamma levels, you got to be looking at these gamma levels where you see some red. Look, we see a red level right here, and it's a 7.3. That tells you there is a chance that this stock can go to 7.3 because this is whenever you see high gamma level, this is like a magnet. It will pull the stock toward that level. That's why there's a chance that this Carvana stock can jump from $5 where it's there right now to $7.3. To look at this in a little more details, I will take you to options here. We'll skip all these things. It's too much detail. Let's quickly jump into the dealer Greek and then to the delta or a gamma exposure. From a dealer Greek perspective, look, I love to see the dealers are negative delta. Look, dealers are negative delta. That tells you the folks like you and I, the retail traders, we are buying up call options left and right. That's why these dealers or market makers have to sell those call options to people like retail traders. That's why they're negative delta. The moment they're negative delta, they have to hedge and buy some stock in proportion to the delta. That's why there will be long stock and short delta, as you can see here. The moment they're long stock here, basically, they will be supporting the move. If the stock goes higher, they make money. They will basically support the move. That's why you got to be slightly careful here. If Carvana tries to go higher, basically the dealer will be supporting it. The move will be exaggerated. But if other hand, if Carvana goes lower, again dealers will be supporting because they are negative delta. So because they're negative delta here, if the stock goes higher or lower, they will support that move. And as you go through a little more detail here, we'll skip all these things. Look at this gamma exposure level. Look at about, say here, $10, I think. Yeah, $10. $10 is the highest gamma exposure level for Carvana. That tells you there's a very high chance that Carvana can go into this level here. Granted, Carvana stock is right here right now around $5, as many of you know here. Next stop could be around here. But if the stock tries to go higher, it can go to this level here because there is a very high gamma exposure here. That's why when the bankruptcy discussions are going on, stock can have this wild swing. As many of you know, Revlon has gone up and down drastically during the bankruptcy discussions. That's why there's a very high chance this also can go higher, mainly because it's a very high gamma exposure level. All right, now let's look at maybe one or two more here. I will go back to the stock screener. Look, we got a few more here. We got Marathon and so on and so forth. What we'll do is we'll look at one or two more here. I know many of you love to look at AMC stock. We can look at AMC very quickly and go from there. Look, we'll bring up here AMC. All right, so we'll do the same thing here. We'll go into a 30-minute chart. So that way we get about 10 days or so here. And we can go to the dark pool levels here. We can say bi-weekly dark pool level here. So this tells you what's going on from a dark pool perspective. Look, there is a nice support from a dark pool perspective at 6.1, and even at 6.2 there is a nice dark pool support. This could be support levels here. That's why they will pull the stock toward those levels here. And then we'll go into Greeks. We'll go to gamma exposure level and go to monthly gamma exposure levels. Look, this one is all over the map, as you can see here. And look, there is a negative delta level, negative gamma level right here, as you can see here. So this is going to keep the stock at these levels here between 6.3 and maybe say 5.5 here. This is a very good level here. This will act and keep the stock in this level here. That's why stock can have some back and forth between say 5.5 and 6.5. so that's why you got to be slightly careful. The moment it gets out of this red zone here, then there is some positive movement here. It can go higher. But understand there are some resistance levels with the negative dark pool levels at 6.9, 7.3. That's why I think this will be stuck between 5.5 and 6.5 for a while here. All right, next we'll quickly look at the options here and bring up AMC and see what's going on here. All right, from an options perspective, look, we got options, right? Let's look at the gamma exposure here. From a gamma exposure level perspective, look at you got to be looking at the negative ones here at 6.0 here. Looks like it can pull the stock towards $6 here, even though stock is around $5 right now. There is a very high chance that stock can go to this $6 here because of this high gamma exposure level. And and look, we got $7 here. That's a very big positive gamma exposure. This can the $7 level can act as a good support resistance level here. That's why stock will be ping ponging between about say 5.5 to 7. That's how it is set up right now. All right, now let's look at one or two more. Let's look at say GameStop here and see what's going on with GameStop here. And let's go here and bring up GameStop. All right, so we got GameStop here, same drill. Let's go into a 30-minute chart and go to Greek levels here, and let's go to gamma exposure level and go to monthly. And look, this one is very colorful, as you can see here, and stock price is 22 in GameStop, came down, as you can see here, nicely. And the way it is set up is right now there is a very high chance GameStop can go higher. Look, there is a nice and bright exposure level here. It can go into this exposure level right here between 23.5 and 24. That's how it is set up here. It will quickly go to those levels here. From a resistance perspective, looks like 25 is a good resistance level here. Let's bring our dark pool levels very quickly here and see what's going on to our dark pool. We can get bi-weekly here. All right, so from a dark pool level perspective, looks like we got a nice dark pool support level here at about 23.5. Look at 2.16 million dark pool ask here. That's why this can pull the stock to that level here. And at the higher level at 26.2, there is a nice dark pool level. Looks like on the positive side here, on the way higher, we got some good dark pool levels. That's why we got to make sure this 23.4 level here, this is a dominant level. It will pull the stock toward that level here. Once it clears it, then we have some resistance levels here, and because of this high dark pool level, I can see the stock going to maybe around 25, 26 level easily. All right, now let's go into the options dashboard here. Look at the Greeks and the gamma exposure. All right, we're at the GameStop here. All right, so GameStop, as you can see here, one of my favorite chart is this here. Look, you got to be slightly careful with GameStop, mainly because look, the dealer or the market maker, they are positive delta. So the moment the dealer is positive delta, think about they're holding a lot of call options. That's one way to think about it. To hedge it, they will be shorting the stock at these levels. Because they're short the stock, that's why market can come down here. Anytime dealers have got positive delta, stock will be choppy. There is a very limited volatility, and it will not move too much. That's why you got to be slightly careful here. This will be ping pong. It will just go from maybe say 23 to 24, some 24, 23 to 25, 26 levels. That's how it is set up here. Because these dealers, when the stock goes higher, they will be covering their shorts and buying, and it comes lower, they will be basically buying or hedging. So that's why you got to be careful here. Because of positive dealer delta, dealer will not be supporting the move. On the other hand, if the dealer has got negative delta, they will support the stock move. That's how it's set up here. You have to be slightly careful because dealer is positive delta here. All right, from a gamma exposure level, look, there is a 23.75 here, nice and high gamma exposure level. It's going to pull the stock toward this level here, 23.75, and I got next level here, 22, very high gamma exposure level. That's why stock is kind of it can come down slightly. One way to understand this is really to look at this chart here. We got correlation chart, look, we are at a positive delta right here. Look, delta is in the positive range right now. The moment delta is in the positive range, Traditix.com looks at historical performance, and historically when the delta is around 0.6, look, the move, the volatility, the price movement is not too much here. That's why it's very choppy. And by looking at this year, it's almost 50-50 here. You know, you don't know where stock will move. If you see a lot of these red, that tells you stock can move lower. But by looking at this year, there is a chance that stock can go slightly higher because more green bars, compared to red bars here. That's how it is set up here. And let's look at BBBY, which is Bed Bath and Beyond, and maybe we'll wrap up. All right, before I go into options dashboard, let's go into this year's stock dashboard, BBBY. All right, we'll follow the same drill here. We'll go back here to 30-minute time frame here and look at the dark pool levels to begin with. And let's look at the bi-weekly dark pool level. And I love to look at the Greeks. Let's look at the gamma exposure levels and go to monthly here. All right, we got our chart set up here. Bed Bath and Beyond, the price is around $3. The stock got clobbered, as you can see here. And look, right now we got some nice positive dark pool level at 3.4. This can right now it's down below that price. I can see the stock going to this level, but look, there are some negative dark pool levels. Folks are really really having some negative position here, so that's why you got to be slightly careful. If you combine this negative position, looks like positive position is much higher than the negative position here. That's why I can see the stock going to 3.4 or so, because there is a nice and high dark pool level here at 3.4. From a gamma exposure perspective, there is nothing much to worry about here. Look, it's telling you around 3.2. There is some resistance level here for the stock because of the positive gamma exposure. All right, now let's go back here to options dashboard in BBBY here, and go into a few more details here and go into, look, dealer is or market maker is negative delta. They're going to support the move. Right now the move is negative, they're supporting the negative move, but if the move becomes positive, they'll support the positive move. That's why I love it when the dealer has got negative delta. That tells you if the stock can go slightly higher, they will support the move. On the contrary, look, right now stock is going lower, they're supporting that lower move. That's what's going on here. Volatility is higher when the dealer Greek is negative. That's why right now there is a little more volatility here. But if the trend turns to positive, the dealer will be supporting the positive trend. So you got to wait. You have to wait slightly for the trend to become positive. Then you can jump in. A lot of folks are buying put options. That's why folks like you and I, the retail traders, are delta positive. That's why dealer is delta negative right now. All right, now as you look through here, look, we got more negative than positive. That tells you stock can go lower. Look, we got more negative bars here, and look, we are at negative delta here. That tells you volatility can be more. And look, as you go into delta exposure levels here, gamma exposure level, there is nothing much here. These bars are very, very, very low here. There is no magnet to pull the stock here or there. I think stock will be, will be looking for this, the dark pool levels here. And I think those dark pool levels that we saw in the earlier, like 3.4 could be a good level to pull the stock towards it, given stock will turn around from the current low level here. So with that, we'll stop here. Thank you very much. Happy investing and trading. Please subscribe.